Good morning, everyone. I'm Nalinakshi Swamy. Welcoming to my channel, Smart Index Edge. Have you ever wondered or have you ever ended your trading day wondering, why did I take that trade? Random entries, emotional exits, and that urge to make it all back. But one day I made a small change. I started trading with a plan, a process, and a clear purpose. In today's video, I'm not just giving tips, I am walking you through a smart day trading blueprint that helps you avoid chaos and build consistency. Let us stop chasing the market and start understanding it. If you're still relying on luck, it is time to upgrade yourself and upgrade your day trading, and you have to bring change in your trading style. See, in this image, what you are seeing a person, trader, sitting so relaxedly with a cup of coffee. Do you want to become like that? So you need to build a plan for that. In this in this video, I'll walk you through how to day trade smartly. Build consistency with discipline, strategy, and smart decisions. Here, you need to go through a rule based strategy, then you will end up with the profits. You need to master the basics first. Many people come to trading platform without understanding the price action, market structure, and candlestick patterns. That should be basics first. You should understand the price action, market structure, and candlestick patterns. Market structure is actually, if I define the market structure, if it is a trending, it is moving from high to high. If it goes sideways, it will stagnate itself, it will stay in the range. So market has two phases. One is trending phase, another is stagnating range phase. So that you need to understand when you need to be in the market, even in the intraday trade. And you should know the candlestick patterns. For example, in the opening bell, a dozy will be formed. Opening first 5-minute candle, a dozy will be formed. Sometimes a solid green candle, bullish candle will be formed. Sometimes a solid bearish candle will be formed. Immediately entering into the trade is not good. Actually, you wait for the confirmation of the price action. That is, you should understand the price action. Price action is confirmation of follow through. So the market will present you with bullish nature and bearish nature and indecision nature, but you should know when to act. You need to learn about relative strength index, VWAP, volume weighted average price, time-wise weighted average price, and market profile, moving average, everything. Because these are the aiding tools, assisting tools for your trade. You should know how the moving averages align themselves, what is the price action when it is staying above the weighted volume average price. RSI, when the RSI will be overbought, when the RSI shows you overbought and oversold conditions, how the RSI will move and what is the behavior of the RSI, you should understand. So and apart from that, if you are day trading, you have to stick to the liquid stocks or indices. Indices is very liquid, either Bank Nifty or Nifty, and some stocks will be very liquid. Those are the basic things you should understand in the market. So you need to have a magnifying lens to look at the chart, how the behavior of the moving averages, how they are aligned, how the price action, price patterns, market structure. If you are into a range phase, you are going to end up in loss. You have to be in a momentum trending phase. So you should know all these things. So you should have magnifying glass to look into the chart. So you need to have a rule-based strategy for entry, stop loss, and target. You should define yourself your entry, stop loss, and target. Only buy above. You should make a rule like that: buy above VWAP. Or if RSI is rising from oversold and price forms higher low. So no trades without confirmation. That should be your rule. You should have confirmation. That is the rule. If you have that rule, you will start trading smartly on intraday basis. And you should practice risk management. Risk only 1 to 2% per trade. So people, they take the trade without any rule and randomly place the stop loss and they will get lost. So if your entry is proper, if your entry is, by reasoning, then your stop loss will also have meaning for that. Set stop loss and stick to it. Never average losing trades. That is the mistake people do. Then you lose, you won't trade smartly. Do not average. If you are losing, erase the trade quickly, immediately, and place the risk. You will be losing only 1 to 2%. Otherwise, you will lose entire capital. What is the use? So your 1 to 2% risk stop loss is your shield for your trade. That is a shield. Know the best trading times. You should know the best trading times. People randomly trade, enter the trade when the market is stagnating. At that time, they will enter. Why? When the market stagnates, actually, the trading takes place between retailers to retailers, not between the retailers to institutions. We need to trade with the institutions. So during the early morning hours, 9:15 to 10:30 a.m., that is high volatility period, and you need to master the trade. It is very difficult, but you can master it. With the rule-based strategy, with the constant observation practice, you can master it. And people do mistake taking the option trade in a stagnated time period. So 9:15 to 10:30 a.m., there will be a lot of momentum. So as an option buyer, you need to stick to that trade and master that high volatility period. It's not difficult. You can do it. And 12 to 1:30 p.m. is a range-bound fake-out trade. That time you should avoid. 2 to 3:15 p.m. trend continuation or reversal will be there in the market. So you need to master those times. You should know the best trading times. Then only you should enter the trade in the best trading times and end up with the trend continuation or reversal time. That can be done, or you can finish off your trade in the early part of the day and you can re-enter after 2 to 3:15 p.m. See, in this 9:15 to 10:30 a.m., it is a high volatility trade. 12 to 1:30 a.m., you should relax and have your lunch and you should not trade. Just observe the market. 2 to 3:15 p.m., the trend continuation will be there. You need to watch the market very carefully and when day to day, some slight change will be there in the timing of the market. But on an average, these are the things. You should know this. Keep a trading journal. Record entry, exit, what is the reason, what are the emotions, what are the outcome. If you start journaling the trade, you will know, you will learn from every trade. That is very, very important. Learning from every trade is very important. When you journal it, you will remember it. It becomes your muscle memory. Why did I do that? What was the mistake? You will come to know that. So you start keeping a notebook and write down everything in this, every trade. So patterns repeat, and the same thing will be repeated on and on in the market. For example, I do consider for the weekly template and the behavior of the market through a week. Since our market is weekly expiry based. For example, Nifty is weekly expiry based and stocks are monthly expiry based. If you start observing the pattern on the weekly basis and the monthly basis, you can trade better. You can come to know what is the weekly balanced line and what is the monthly balanced line. Knowing that will help you very much. So, if you start doing each and everything, recording each and everything, definitely you will come to know the pattern of the market, how the market behaves. How the market behaves in the early hours, where it stagnates, at what time it picks up again momentum, and you can know everything. So avoid over trading. Set a daily trade limit. So you are going to take only one trade or two trades. That's it. Sometimes the market will present you so many scalping trades. Don't get tempted over that. You just stick to only 2 to 3 trades per day. Walk away after 2 stop loss hits. Don't trade. Sometimes you cannot be correct 100%. Because market may behave wildly, it may take your stop loss. Once your stop loss is hit, don't trade on that day. Walk away after 2 stop loss hits. Stop over trading. You should stop over trading. When you stop over trading, that is the win. You are going to win yourself. Stay mentally sharp. No revenge trading. Some people, they start trading revenge. They will lose money. They will start trading. I must get back that money from the market. That is revenge trading. Stay calm and focused. Treat trading as a business. When you treat trading as a business, because business is like that. There will be ups and downs. Accept that. No revenge trading, be calm. When you stay calm, if you don't take revenge trading, that is a step toward your success. You can trade smartly. Backtest and refine your strategy. Test with historical data. How historical data? When you start journaling with everything on your notepad, you know the history. The data will be there. You need not flip the pages of the notebook and go through it. It will stay in your brain and as a flipping pages. You will remember everything. You will remember the patterns. You will remember the times, when to enter, when not to trade. Identify winning patterns. Adjust for consistency. So you will come to know what are the winning patterns. Winning patterns are always in the intraday time frame when everything aligns. Everything aligns with your price. All the tools aligns with the price. That is the winning pattern. For example, you will get when the price wants to move sharply, even the 20 and 20 will align above the 200. 8 period moving average align with the above the 20 period moving average. and RSI will also be in sync with the moving averages, and price will be above all these things. So everything will be aligned. Those are the winning patterns. When the market is going sideways, they will intertwine with each other. That is an indication. When the moving averages are coiling with each other, the price is also coiling. And the RSI will go horizontally. It will not go move up or down. That is an indication. So you adjust for consistency. Like that, you will adjust for consistency by seeing. Observation is very, very important in the market. How do the observation will get registered in your mind? By recording everything in your notebook, journaling everything in your notebook, so that you can recognize the pattern, price action, and everything. Then you can trade smartly. And you should have all these rules for your trade, for being smart to trade. So you should have a lens to see everything. This is how you need to be alert. You should know everything. Use clean and focused chart. Avoid clutter. Many people, what they do, instead of focusing on the price action and everything, they put a lot of indicators on the chart. That is a clutter. Confusion. If you do not know what is the purpose of those indicators, then you will end up with a problem. Use minimal indicators. Price action plus 1 to 2 confirmation with the indicators is enough for your trade, which is relevant to my trading. These are relevant to your trading. So I use all those things. For example, in this chart, you are going to see left chart cluttering with so many indicators. And this is the right thing. You can see a clean chart with minimum indicator, minimum indication. That is enough actually. I'm showing you the example of my chart, trading view chart for an intraday basis. What I use is I use a balance price from the previous day low and previous day high, and I will see what the price is doing. Apart from that, I use my circle strategy, that is 5 minute trading strategy. I have demonstrated, I have made a video on that. I consider each 5 minute candle as a circle, and the circle and the cycle begins when the price starts moving in the proper angle direction. Proper angle direction means positive angle direction. So when I consider the 5 minute candle as a circle, and when the price is moving in the positive 15 minute to 30 minute angle direction, that is a positive thing. So in this chart, there are some, I have made some calculations in the 13 minute and 15 minute angle direction, and price levels are plotted on that, and the red color indicates no, it is negative angle, don't trade, sell, stop. It indicates me that it is going to be a negative thing. And if it is in a positive angle, it will be, direction will be positive. Like that, I consider these are the two things I use, simple things. You don't need. If you cannot make out anything, you can take the assistance of, you can switch on and between to take the consultation with the RSI and everything. You don't need, if you start practicing this, you need only few things in your on your chart. That is enough. I am seeing the price action over here, a huge big bearish candle, not indicating anything. Here, when you see this at the bottom, green candles, I'm not entering this trade because it is a deep down. You need not trade this on intraday basis. That is the most important thing. Accept losses gracefully. Even top traders lose 40% of the time. So key for this is small losses, bigger wins. So this is the image representation. You should shake hand with the loss. Then you will get a big green glowing candle. Final tips is smart trading, day trading is planning plus patience. You should plan yourself. How the planning will come? By constant observation. And you should know the basics. Then you should have patience. You should wait for your setup. If you don't wait for setup, if you don't have patience, you are going to lose it. Follow your rules. Protect your capital. Next thing is following your rules and protecting. Protecting is very important. Do not slaughter the egg in the, greediness to get the golden eggs at a time. You should protect your hen. Like, share, and subscribe for more smart trading insights. Plan, patience, protect your capital is the mantra for your trading smartly on intraday basis. Thank you very much, friends. I am Nalinakshi Swamy signing off.